Hey, good morning, everybody. This is Yusef Scott coming to you from the Mirrored Millionaire Forex Group. I definitely appreciate you guys tuning in once again. As I promised before in previous videos, that I was away for a month or so, and I wanted to get right back into providing you guys, my loyal followers and viewers, with weekly videos, couple videos a week, outlining some heavy-hitting subjects and topics that could really benefit you in in your trading. All right, so this video, what I want to go over is I want to go over the importance of you guys when you're trading to shut down your losses. You know, um, and I'm going to get into exactly how important it is and give you some reasons why it's so important. All too often, we're trading a market and we find like a sweet spot in the market, and we're successful. We make some good trades, put away some few dollars, and we're on a roll. All of a sudden, the market turns against us, and now we're in on a bad trade or two. And it's best to just when you're in on them bad trades, if you catch your, like, for instance, if you have $500 in your account, and let's say you have $500 in your account, and you realize that you're in on this $1 trade, and let's say you step away from your computer, you come back, and the market then shot away from you, and now you're looking at your account and you're like, you know what, I did get in a little too heavy. Or you might just realize that you don't want to give away $75 or $100. You know, it's best that if you do not know how to hedge, for you to just shut down that trade. Just to let you guys know, I do have an awesome video on hedging. I want you guys to check it out. Just if you're already at my page, actually just do a search on hedging, and it's a great video. I put out some strategies that can really help you guys. But nonetheless, if you do not want to get rid of that losing trade, you might want to just hedge. But if you realize that you made the mistake of thinking that the market was going to go up and went down, and let's say you can sacrifice $5, $10, or whatever it is, because being in a negative $100 on a trade for $100, if you have a $1,000 account, or a 500, or I'm sorry, $5,000 account, or even more, it might not hurt you as much as only having $200, and wind up giving away or giving back $100 or $50. So you want to make sure that you have a great risk management strategy in place, and you use proper money management when you're trading. And this right here, what I'm suggesting to you guys, is definitely a the first step to money management. And that's, if you're in on a losing trade, just shut down the losing trade, and then you want to just shut it down and reset and regroup. You do not want to go chasing that losing trade, because what happens all too often, what happens is you're in on a losing trade. Let's say you're in a negative $20, and what will happen is you might think that, okay, I put in a buy and the market went down, and now you increase your volume or whatever, and you put in a couple trades going down, and then what will happen is the market might turn around on you again. So and then you find yourself increasing your volume all over the place just to make up that $10 or that $50, when you could have just shut down the trade, because you realize that the market is not going in the direction that you originally predicted. Just shut down the trade and go in the direction that it's actually going. But what you want to do is, if you're ever in on a losing trade, you need to take the time to examine the market. Realize, hey, you know what? I made a decision that it was going to go down. It didn't go down, it went up. Step back, take a look at your chart, shrink down your chart, minimize your chart, and look at why it actually went in the opposite direction that you predicted. Because when you realize that it's going in the opposite direction, there's a reason why. If there's no news out there, or there's nothing, no type of fundamental things in the market that will make the your trade go in the opposite direction, then that means that you may have looked at something incorrectly. So what you want to do is look at the market for what it is, take a step back, look at the market and realize why did it go in that direction before you get back in. That way you can make a better choice next time, you know. And so all of this is going to help you guys realize you know, the full picture, you know. So if you're like I said, if you're in on a losing trade, do not try to chase that trade, you know. Do not try to chase your losses. Just shut down the trade if you can afford to, and then just take a moment, take a step back, take a couple deep breaths, and then regroup, reset your mind, get your thinking back in order, and then go back at it later. You know, because it's better to be able to trade with a sound mind rather than trading emotionally and trying to regain what you lost. You know, and one thing that I want to say is that if I'm losing on a trade and if I have the strength to hold it, I might hold it. You know, and that's why it's so important, you guys, to trade at a volume that's not going to hurt your account. One thing that I always do when I'm trading is that, let's just say for instance, I have $500 in my account. I never want to trade over 50 cents a pip, because I always want to give myself at least a 1,000 pip range where if the market goes 1,000 pips, then it's going to wipe me out. Chances are it's not going to go 1,000 pips before you have enough sense to close down that trade. So that's just what I really wanted to point out to you guys. I wanted to make sure that you guys know that there are strategies out here, and I have a lot of information to give you guys. And you know, if you just take the strategies that I provide and you utilize them on a daily, I'm telling you, you will find that your trading abilities will definitely increase. You will find better ways to get out of them bad trades, and you know, things will definitely get better for you. So you know, with that being said, just remember that do not chase a bad trade. You know, if you can afford to shut down that losing trade, just shut it down and regroup, and then revisit the trading platform later when you can look at everything for what it is and not be so emotional trading. You know, because an emotional trader is not a good trader. You know, you're making these decisions just like if you're in an argument with your spouse, boyfriend or girlfriend, whatever it might be. And you're making these decisions based on your emotions. You're yelling. You know, chances are things may not go right. So what you want to do is you want to make sure that you can really you know, just be able to make sound decisions while you're trading. And the best thing to do, shut your trades down and, you know, revisit it later. All right. So without further ado, you guys, I thank you so much for tuning into this video. I will be providing more strategies and tips in other videos. As I said before, do a search within my page on hedging. I provide great, I provide 3 or 4 awesome hedging strategies that you'll find yourself getting your money back and then some. Because that's the name of the game. That's the reason why we're here, to make money. There's no need to be trading if you're going to lose all your money. You know, rule of thumb, if you're losing your money, you better demo and practice first. You don't want to be trading live, losing all your money. You know, you can lose your demo money, and then once you get better, just trade live. All right. I do appreciate you guys. Take care and trade smart. All right. Take care.